Okay guys, welcome to the FX Street webinar. My name's Ian Coleman. I'm going to be your host for the next 60 minutes. I'm one of the traders and analysts at First for Trading. Okay, just a brief description about our company. We offer analytical reports and trade recommendations for the 7 o'clock open on FX majors and crosses. We also cover stock indices and fixed income. Today we're going to talk about support and resistance. Okay, areas of support and resistance. We're going to look at fib levels. We're going to look at trend. We're going to look at some moving averages that I use to dictate basically what the current trend is. Okay, we're going to look at trend lines. We're going to look at the RSI, the 50 level on the RSI. So we're going to look at a combination of things that I look at. We're going to go through time frames. We're going to look at fib extensions, reversal patterns, and more importantly, we're going to look at price action. Okay, so we're going to look at how price reacts at areas of support and resistance. Just because it is an area of support and resistance doesn't necessarily mean that we're going to get a trend reversal or a correction at that point. And I'm also going to talk to you about money management, okay, how I look to build on these positions that I take from areas of support and resistance, okay. So I want confirmation that the trend is going in my direction. I look to trade in a small amount, and then as the trade evolves, hopefully, in the direction that I'm looking at, okay, then I look to build the trade, okay, until it then comes to the next major area of support and resistance, which I then look for reversal patterns, okay. So I'm not always in the market. I look at a total of 16 different currency pairs, and I break most of these down from higher time frames. Okay, so I'm looking at weeklies, even monthly charts, all the way down into sort of 5-minute segments. Okay, and it's from the 5-minute charts that I'm really looking to start building a long or a short position. The first chart I've got up is Aussie dollar. Just to talk you through the settings, I've got two RSIs on there. The first RSI is a normal RSI with a 15 setting, and that's with oversold and overbought at 75 and 25. The next RSI is an RSI 2, and that's actually a 7 setting, and that reacts far quicker because of that the settings on there are 80 and 20. Okay, I've got on the main chart, it's obviously a basic candlestick chart. I've got Ishimoku cloud on there, which I only really look at in higher time frames, but again, in any time frame, it's a good visual indicator of where support and resistance is going to be. I've got two moving averages on there, which I use not just to keep me in the trend, but also as support and resistance levels. Now, you'll see that as we go through these different charts that we're going to talk about today, how they work very well for trigger levels. The other thing that we have on here is these lines going across. This is market profile. So I won't go too much into market profile, but basically market profile shows you where the point of control is from the day's trade action. Okay, it shows you whether or not the market has moved away from the point of control, and it also shows you the value area. Now, the value area is basically where 70% of price action has occurred that day. Now, if we have a tendency to move outside the value area, then it means that the clever money, if you like, the bank money, is happy for price to trend lower. Okay, so professional traders or bank traders look a lot at market profile, and it basically is a good indicator. Every half-hour segment is a letter. Okay, we could turn this chart into market profile in a while, and I can show you. and it basically shows you breakaways. It shows you what they call single prints, okay, which basically says that the market's gone too far. And in fact, we'll just put this up now and see if we're getting a single print on the market profile, and then I can talk you through it. No, we haven't. So down here, okay, this is your point of control, all the way up at 102.52, and this is your value area. Okay, so this is, at the moment, this is where 70% of price actions occur today. Okay, what we have a tendency to get sometimes is what they call single prints. So it will move down very much like a spike on a normal candlestick chart. So it will move down, it will reject lows, and then quickly move back up. But because it's in a half-hour time period, if you get any double prints, in other words, it's gone over the half-hour time period, so it's gone from, say, 11:45 to 12:05, then it no longer becomes a single print. So it shows that the rejection is quick, okay, and that's what you want to really be looking for in market profile. So we'll just change this chart back. We'll do a separate webinar at some point on market profile. Just been asked to refresh the cam, which I will do. But we're not going to have this. It's CQG, and it doesn't seem to like this this Hotcom software, so we keep on having to switch it back over. Also, if the noise gets a bit too loud while I'm doing this this seminar today, then please let me know, because the judge's residence behind me, they're cutting down the bush literally at the back of my office at the moment. So if it gets too much, I'll close all the doors. Okay, so the first chart we've got up is Aussie dollar. Now, I know it looks quite complex, quite intense. Okay, this is the daily chart, and I will just refresh again just in case you can't see it. Okay, so we had this strong move up. We broke through, we rejected a weekly trend line here. In fact, if you just bear me one sec, I'll get a drawing tool up. Move it. Refresh this camera again, just in case. Okay, so we had this trend. We then broke through the trend, but what happened was we moved down to my areas of support. So this is my, once it's broken, this then becomes support, as in most technical analysis. Okay, so the way I'm looking to the RSI and these moving averages is for support and resistance. If I'm below the RSI, then in that time frame the bias is to the downside. Okay, but I'm also aware of price action and shorter time frame price action. Okay, so obviously if the trend is up in shorter time frames, then I only want to be pulling the trigger lower if I'm getting reversal signals in that shorter time frame. I hope that makes sense. So basically, if the daily is bullish, but then the 1 hour is bearish, then I need a good signal in the 1 hour to take me lower. Okay. So here, the reason I started on Aussie dollar today is because I've got a few what I call confluence areas. Okay, so we've got areas where support and resistance is quite strong, support or resistance. Okay, so here, first of all, we've got to move up to 161.8%. So this is our first wave. So we've got one, move back down to support, to the 50 RSI, okay, and then we use this level, okay, as our support from that point onwards, because we're now bullish. So in short time frames, we want to be looking, especially off the hourly chart, I then want to be looking for reversal patterns. In the daily chart, I want to be looking for reversal patterns, bullish patterns in the daily, in the hourly chart. So bullish in daily, I want bullish signals, chart formations in the hourly chart, and we get that off this EMA here. So it moves back up, even a star formation, can't break the trend, moves back down, and again 50 RSI is holding, and I'm getting my EMA that holds, squeezes in between the two EMAs, which happens quite a lot, okay, and then pushes to the upside. Again, here we get rejection around 161.8%. It breaks the low, okay, and then we move back down to this area of support. Now, this area of support off the moving average again, just to show you from the start of this week, and then we break it down into time frames yet again. So we're looking at areas of support and resistance. So this blue line was our area of support. So we want to get some confirmation, price action yet again, of a move higher from this level. Okay, what I want to see, and that's why this is highlighted in these boxes. Okay, what I want to see is an engulfing pattern, or what I actually call an outside bar. I want to see the whole of the price action taking in the previous hourly candle, and that basically shows me that the bias has completely changed at my area of support from bearish, because we're in a bear trend. Okay, the hourly moving average, the hourly EMAs are to the downside. We're making lower lows and lower highs, so it's still to the downside, and we're underneath the 50 RSI. So I'm picking bottoms here, if you don't mind the expression, but I'm picking the bottom off my daily support level. So I'm using an hourly candle from a daily support. Okay, so I then get my engulfing pattern. Okay, I trade normally in 2 units. My first price objective is either the first EMA or the second EMA, okay, depending on how price action is going, how the flow is going in that price action, and also what the short-term indicators or chart is looking like. So break it down into 5 minutes, 15-minute chart, and I'm looking for that flow. Is it impulsive? Is it corrective? Okay, if it looks corrective, then I want to be locking in some of my profit quite early. So I want to be getting out of that first EMA in half of my amount. Okay, my stop is still underneath the low of my trigger candle. So I'm half off, stop below the trigger candle, and this is why we can all forecast the market, but there's a big difference between forecasting the market and also trading the market. Okay, the money management, I think, is probably 40% of actual trading. Excuse me. So we move higher. Okay, remember this is our support line, this blue line here, coming in at 101.63. This is our daily support. Okay, moves off our hourly support and back down to this daily support, and then we get the other candle formation that I like. Okay, we don't get stopped, we're not out yet, but then we get the insider army. Okay, so completely opposite of a bullish outside bar is the inside bar, and the inside bar tells us completely the opposite of an outside bar. An outside bar tells us that the bears were in control, and then the bulls completely took over at our area of support and rode or took price action higher. Okay, the inside bar shows us that nobody's in control. It's not as good a signal, but it shows that there's indecision at that level. So yet again, we come down, there's indecision at this level, and when we get a break of the outside bar, okay, that's our signal to get long. Okay, price action moves up through the 62. Okay, wasn't aware of this area apart from the fact it's obviously the top of the hourly Ishimoku. I'm not particularly bothered in the hourly chart or a 5-minute chart of where the Ishimoku cloud is. What I am bothered, or what I like to keep an eye on, is the Ishimoku cloud in daily and weekly charts. Okay, that's how the Japanese traders use it. Okay, it was built by Japanese trading rooms, and they use it for dailies and weeklies. So, you know, we shouldn't really try and get outside that box, if you like, and and start formulating our own rules around it. Moves up, moves back down, doesn't make a high or low, but this is choppy price action. Okay, if this is an impulsive price action, then we'd expect a lower high here, but then we'd expect this to move up, this leg to move up to 161.8% before a small correction, and then another move higher. Okay, coming back to our fib levels. Okay, and it didn't happen, so we get this choppy price action that moves sideways, and at that point, that's a warning signal. And then you've got to have so many different tools in your FX toolkit, if you like. Okay, and chart formations is obviously one of them. So we've gone from looking at fibs, looking at price extension, and now we're into a chart formation. And this chart formation here is an expanding wedge formation. Okay, and an expanding wedge formation, sorry about the writing, but you can see the clear lines on there, is a it's a consolidation pattern, but it has a bias to break to the downside. So as opposed to an ascending wedge formation where we coil up and momentum falters at the top and we get an impulsive break lower, okay, this is an expansion, okay, that has a bias to break to the downside. If the expanding wedge, making loads of mess here, if the expanding wedge was that way, okay, then we'd expect a break to the upside. Okay, so it's like, it's not like a consolidating wedge formation, it's opposite, but it has a tendency still to break in the same direction, if you see what I'm saying. Okay, and it's not a pattern that many people use. So just flipping this back a bit. What is the green line? This one here, that's off an Ishimoto cloud. In fact, we'll just drop the Ishimoto cloud because it might confuse everybody a little bit on here. So yeah, that's called the lagging line on Ishimoto cloud. There's three lines on Ishimoto cloud, just to briefly describe them. There's two Zen lines, Tenkan Sen and the Kijun Sen, and then another line that's called the lagging line or the trigger line. We do a separate webinar on Ishimoto, and I don't know if we've got one recorded, have we, Adina or Maud? There might be one in the archive that you can go and have a look at, and we explain basically the triggers for purely trading Ishimoto, and that lagging line is quite important. Basically, the lagging line has to be underneath price action when a trigger is generated. So let's go back to our daily chart. So we're flipping through time frames, okay? So go back to our daily chart. We want to see, okay, what sort of reaction we get up near the high. Now, we know that that's an area that's sort of held bullish price action, okay, and then it breaks this wedge formation this morning to the downside. Obviously, we had some macroeconomic data that came out overnight. We had the Australian unemployment figure, okay, which was bad, and that forced it lower. So you can argue that nothing to do with an expanding wedge formation, it was to do with the figures. But going back to price action, okay, so we've moved up, and yesterday this was the top of our range, okay, in Aussie dollar, and we get an inside bar, okay, and we get an inside bar at the top of our value area, okay. If price action fails to break the top of the value area, so we can see the value area is building, okay, it's here, then it's here, and then it's here. So we know that the bias is to the upside, but we also know that this price action's pretty choppy. And if we fail to break the top of the value area, normally in quite early price action, okay, then we look for a move underneath yesterday's point of control. So the price moves down, moves back up, and then we get that break. So the bias then is skewed to the downside. So where do we then look? If we've missed the opportunity to sell, okay, which was at 4:30 in the morning, I was about, but I wasn't trading at that time, then do we leave that pair alone? Do we want to be trading against the trend? Well, then we want to be looking again for our areas of support and resistance that we've talked about. So let's just clear this off. We'll get rid of this horizontal line. Okay. So then, can we get any more confluence areas? Okay. We're looking at these EMAs. That's why the RSIs. RSIs are beginning to look oversold. Okay. So we know there's a good chance that we're going to get a correction pretty soon. Go back to our daily chart. Let's remove that line. Where is our next point of support? Remember, if this is a wave sequence, and this is 1, 2, and 3, then the corrective wave should be down in 3 waves. If it breaks and holds this level today, then obviously this is the next area of support and resistance. And then we're looking at something completely different, because then we're looking not at a bull trend anymore, but we're looking at a possible bear trend with a head and shoulders formation. So this is solid, okay, around that big figure as well, around 1 parity level. So we know there's going to be support around here. But in the meantime, if we're looking to scalp, we're looking to get in on a trade, then we're looking at this area of support, okay, 101.27. So I'll put my horizontal line on. Remember, the bias here is still to the upside. Even though we haven't actually got any reversal patterns here. Weekly is going to look pretty nasty, probably. But we haven't got any reversal patterns. So go back to our daily. Okay, so this is an area of support. Now, if we are to believe that this move is a corrective sequence, then what we should get is we should get a combination of 5 down, 3 up, 5 down in waves, okay? And here we've got 5, so we've got 1, 2. Notice how it bounces off these areas of support. So 1, 2, bounces up, then down, inside bar, which gave us that outside bar on the hourly chart, remember? Okay, and then we moved back up, so we've got a lower high. The only thing that worries me about this at the moment is that it is a strong move down, okay? It's quite impulsive, and it's quite hard to pick up after these aggressive moves. But, okay, we've got our daily support, which we talked about. Let's go down to hourlies. Then we get to our fib levels, our fib extensions. So we want to be taking it down to the low, back up to the high. Did we react around 161.8%? Yes, we did, but it was only small because the downtrend was quite strong. It was a small correction. What have we got now? 261.8% down here. Okay. So I'm then looking. That's annoying. Clear. Okay. I've got a confluence area. Okay, I've got 101.25, which is my daily support, and I've got this 101.15, which is my 261.8% level. Now, a corrective sequence, if we move up, the first level that we'd look at is here. It's the bottom of today's value area, because price action has moved away from value. Bounce to 101.79. Maybe. This is our first area, 101.59. Small correction, and then probably a move back up to 101.79. Watch the moving average on the way down though, because that will have a tendency to act as support resistance. It might end up being the lagging moving average that comes down. But we should at least expect a bounce around this level. Remember, we're oversold. So then we want to take it down to our time frames, okay, all the way down into 5 minutes, because we want to be catching. If this is we're catching knives here, okay. We're trying to stop the train. The train's going at a hell of a speed as well this morning. So we really want to stop in front of it, okay, and say, yes, we're going to pick up some cash off the train line, if you like. So we need to get decent signals, and what we also want is we want minimum risk, okay. We don't want to be putting too much of our cash on the table, but we also don't want to miss an opportunity if it is staring us in the face. So here we want to be looking for our reversal patterns. Whoops. Let's expand it up. So what do we want again? Well, we know what we want. We want insider armies that have confirmation, or we want an outside engulfing bar, or a combination of the two, because a lot of the time we can get a combination of the two. So here, inside bar doesn't break the trigger bar. Okay, this isn't an inside bar. This is a hammer. This is an inside bar. Doesn't break the trigger bar. We get another inside bar, and then we get this engulfing candle. So it engulfs 10 minutes worth of price action. It moves higher. Okay. What will normally happen if it's a bullish engulfing pattern, okay, is that we will get on this short time frame. We will clip the EMA and we'll move back to the Marabuzzo level. Now, the Marabuzzo level is 50% of the open and the close of the bullish candle. Okay, so here shows the Marabuzzo. There's a bit of software that we've written for this CQG package that basically highlights us to Marabuzzo. So it's 50% obviously on this bearish one. This is 50% here. So the real decent trigger level, and I'm already in small, is at 101.20. Now, how much do I want to put on? I only want small because I'm catching knives here, or the train, or whatever. And you know what happens if you put a sharp knife into your pocket? You end up with a squeaky voice for quite a long time. So you've got to not risk too much until the trend confirms that it wants to go our way. Okay, so we've gone in small. I also don't necessarily just put my stop underneath a low. If the trigger candle's not too big, I'll take the length of the trigger candle and I'll take the low of the trigger candle and I'll use that as my stop. I have got my stop in at 101, 110.80, I think it is. 100.80. No, I haven't. Hold on 1 second. I have a PC. I'm in at 90. Okay, so I've given myself a bit of breathing space just in case I wasn't looking at the market too much while we're doing the webinar. But a stop 110.05 or around the 100 figure would be more than ample to give yourself that the chance of that spike low and then the move back up. So how do I then manage the trade once I'm into it? Well, I want to leave this first part to run, but because I'm only in small, I do want to build it if I get confirmation. So then I break down time frames. I go to 10 minutes. 10 minutes isn't bad, but it's not great. It was rejected at the high and the low, so it's a bit of a spinning bar. So I don't really want to build on that time frame. 15 minutes. Again, outside bar. But what's this doing to my psycho, if you like, to my feeling about catching this knife? Well, I've got a 5 minute, I've got a 10 minute, I've got a 15 minute bar. all engulfing, all at my support level. So I know I've got a reasonable chance now that I'm at least going to get a little bit out of it, and then break it down 30 minutes inside bar. So indecision, what does it need to do? It needs to break the high. So until I get a break higher, okay, which will be through 101.31, I just want to be sitting with my 1 unit. I don't want to be increasing this to try and get to this level. Okay, if I break 101.31 and I hold, then I might consider building it up a little bit, pulling in my stop loss slightly, okay, to the upside. But what I really want to see, because I'm trading off a daily support, I really want to see confirmation in the hourly that my bias is correct. All I've got at the moment, and we're 31 minutes into it, is indecision. Okay, it's indecision at my support and resistance. Nothing more. It's not a signal to, to get aggressively long. It's just showing an inside Arami candle at the moment. It's not even broken the Marubozu level. Okay, so it's just stalling. If I get a break to the upside, okay, after my Marubozu, then I can think about trying to build on this long position, but not until. And then, if I'm still in it at the end of the day, which I doubt I would be, I then want to go to the daily, and I'd need to see a good rejection off that support. So I'd want to see it really back above 101.75 to think about building up and building, stronger long positions to try and take this pair up towards sort of 106, 106.90 area. Any questions at all? So just because I'm, like I say, it's a scalp trade, I'm catching knives, I'm trying to, so I'm not trading in large size. The signal is not strong. Any questions? No. Okay, let's go to another pair. What a mess, eh? Take these off, take everything off for a minute. Okay, this is cable. Let's just refresh the chart. Weekly. Now this is a weekly trend line. In fact, I'll show it off the monthly because it gives it out even better. So this is our monthly trend line. We're in a consolidation triangle formation. Sooner or later, this has got to break. Now, the bias is mildly to the downside. If it does break to the downside, if it is a proper flag formation, it is a disaster. I don't know whether it's really going to happen, but a proper flag formation off this monthly chart would dictate that we're going to, down to here, parity area, which would just be quite incredible. So I don't think it's going to break to the downside, to be perfectly honest. I think this trend is going to hold and we're going to squeeze, and I think then we'll probably squeeze up as opposed to squeeze down. Notice how the moving averages again have worked. Okay, price action's not particularly great in the monthly. But weekly, off that weekly chart or off that weekly trend, what do we get? We get an inside Arami candle, moved up, hit our moving average. Remember, the RSI is still bearish on both time frames or on both settings. Okay, and then we move down off. Let me just get rid of that one. Off this area. So on a weekly chart, okay, we note the area, and then we break it down to the daily. Pin bars. what I didn't explain about these moving averages is that as you move it down through time frames from weeklies, from monthlies to weeklies to dailies or hourlies, blah, 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 what is blue, or the closest moving average, then becomes red, the furthest moving average. So obviously when we saw it here on the weekly, there's blue and close. On the daily, it's red, okay, and the far moving average. So you get these pin bar rejections, but what you need to do then is you need to get down again, but not all the way down to an hourly. You really want a 4-hour chart, and you want to be looking at price action, and you really want to be getting a decent reversal candle. We don't really get them, okay? We don't really, it spikes in all sorts of directions, and we don't get any engulfing, we don't get any inside Arami candles. We do get one here. It doesn't break to the downside, it actually breaks to the upside. So it's quite hard to pull the trigger and get short at that period, or at that time. Okay, so messy price action moves through the moving averages, moves back up, and this time it clips. Okay, on this second attack at the high, and this was after a very, very decent move up. Now, I'm going to talk very quickly about Fibs, and this is why I'm quite fanatical about Fibs. Okay, because 127% forms a lot of harmonic patterns. Okay, so we look at 161.8, we look at 261.8, we look at 61.8, 50%, blah, blah, blah. We look at all of those for Elliott wave. And Elliott wave to me, yeah, I like Fibs, but Elliott wave's a bit of nonsense because I can never work out what wave I'm supposed to be in. But harmonic patterns, if you can spot a harmonic pattern, they normally have about a 70% hit ratio, so they're good to have, okay, especially in your armory. 127% is one of the key fib levels in the harmonics. The other two really are 78.6 and 88.6, and also 0.382. So, we get this move lower, okay, towards 127.2, and then we get this push up, and the price target for that pattern is at least 61.8% of the move down. Okay, so it moves back up, and then we get into this resistance level again, and we stall. Okay, again, not any particular great price action, and then we need to move it down to dailies, and in dailies it's a different picture, okay, because our daily chart shows sporadic or massive amounts of indecision, and then we get our bar that we want to see, which is our insider army bar, breaks to the downside, okay, and then starts this move lower. So these daily highs, daily lows, inside bars, bearish outside bars, and marabuzos, that's really all I look to in price action, and that's what I want to see. Okay, then let's remove that. Okay, so where is support? Where's resistance now? Retracement. Okay, 78.6. Bang on the button. Bang on the daily trend line. 153.77. That's got to be our area that we look at for support. Okay, weekly trend 78.6. That will make a body scarlet pattern. Okay, if we get down to that level. So we've got, just to show you how it would work. Come here. So that would be our bullish garnet pattern. So prime support at 153.77. Now, how can we get in that trend? I'm going to move all of this off now. Okay. Well, we've got our moving support and resistance levels. Okay. Here, on this move, bounce back up. After the break, what support becomes resistance. So it breaks, moves back, then moves lower. Okay, inside bar here, moves up. What does it hit? It hits our resistance level. Where are we on the RSI? We're to the downside. What is the bias? The bias is to the downside. Only towards 153.77, but it's still a move lower. Okay. So we go to 60 minutes. Evening star formation. It's not highlighted on my chart, but it looks pretty good for one. Okay, and that's at that area of resistance. Remember, this support level wasn't there at that time because obviously it's moved. Okay, and then we got this move up today, or last couple of days, very similar to what we've seen in Aussie dollar. Okay, in the fact that it's an expanding wedge formation. Okay, what do we get near the top? Huge amounts of spikes. Okay, not quite an inside bar. You know, if you wanted to wait, then obviously the break at this level is pretty key for this move down. I didn't trade it. Wish I had, obviously. If you don't, I'm not a great one for saying fiddle the figures, but it's worth just breaking down time frames to see what sort of price action, what sort of chart formations we're getting at that level. Okay, so remember 153.77 is our area, the support. What do we want to see when we get down there? Well, it's a fib level. It's a weekly trend, so we want to see hourly, 4 hourly, a daily pin bar would be nice, around 153.77. We don't want to just blindly buy it just because it's got down to that level. Okay, does it line up with anything? Can we get any fibs on it? Let's just move this lower. So this is dictating. 127 was a little bit of a spoof, you see, this morning. Just a little gradual move higher. Okay, it's through. You could get quite an aggressive spike through as far as fib levels are concerned, and then a move back up maybe. But you'd want to see, and it is a wide area now, a bounce, rejection candles, reversal candles in this zone. This what it's going to be, 40 pip zone, I suppose. Okay. I've got a funny feeling Aussie dollar's broken. Not yet. Still showing indecision, you see. It's not great, is it? You know, we need an impulse buy now. This is our first leg. So we need to at least get over here to prove that we've got, I hope you can see that. It's just consolidating. We really need to get at least a higher high and move through these, at least this moving average to show that we're at least attempting to move up. Now, getting off the subject a little bit, we don't want to use our bias, okay? So can we can we see different currency pairs? We've got to keep an eye on them all. Okay, even if you don't trade them all, you want to be looking at them all. One that's flagging up today is Euro Aussie. Okay, and this would actually dictate that we get a larger move down in Aussie. We've got first wave, second wave. Okay, inside bar moves up, outside bar moves down, inside bar corrects higher. Okay, then moves down. What do we want to see? We want to see an outside bar. We got one here. It was a decent outside bar as well. But when we break it down into time frames, this was the outside bar. Okay, it gave us at the time a head and shoulders formation. Okay, so left shoulder, head, right shoulder. Break looks fantastic. What do we need to see? We need to see a break of the neckline to get long. So we didn't get that. And what's happened is we've overextended. But now look at it. Now we've got another decent outside bar. Remember, this one's got spikes higher and lower. It is an outside bar, but it's not fantastic. So we need to wait for that confirmation. We need to see a break of that neckline to the upside. Today could well be a different story. We get rid of that. This is our 261.8% level. What's this last leg in? 1, 2, 3, 4, 5. Nice. Aggressive move up. Again, pretty nice. So I've got an outside bar. Whatever happens today, I've taken it out, haven't I? I'm going to be a green candle unless something really drastic happens in the next 11 hours. I'm going to have a green candle, and my low is lower than yesterday's low, and my high is higher than yesterday's high. So I've got an outside bar. So I don't really need for that one to close. And what I can do, I can start messing around and looking in this shorter time frame for a pattern. And that's a much nicer pattern, isn't it? Left shoulder, head, right shoulder. Okay, where am I on the RSI? I'm bullish now, very bullish. This is my support level. Where else have I got support? I've got support here. Where else have I got support? I've got support here. Do you see where I'm coming from? Inside bar to pull me lower, and then shorter time frame. Because remember, I'm taking it off a 1 hour formation. I'm not taking it off a daily formation. I'm taking it off a 1 hour formation. I want to see 5 minute, 10 minute, 15 minute. What happens? I get long on a signal. I then, what do? I'm only in small, but I wait. If it breaks under here, I'm out. If it breaks here, I'm buying some more, because this target is going to be decent. It's going to be, shall I do the calculation? You take the bottom of the head to the neckline, which is 120, 120.50, 119.20. Okay, so that is 130 points, is it? Ish. Okay, and then we take it from the break line. So, yeah. Okay, and then we want to take 130 pips from the break line. So we're looking up here, 121.90. So, again, coming back to money management, this is risk for our first unit. When it breaks there, where can I then get a double up? So my average is going to be around about here, probably. Where do I put my stop? I'll put the stop around here. Okay. And I've got all of that as reward. And that's going to be about 4 to 1. From this drawing tool. Okay, that's, let's say about 3 to 1, 4 to 1 risk reward. And that's what we're looking for. We're looking for decent risk reward. So build in small, wait for the confirmation of the trend. Okay. Wait for the break of the trend line. And if we get a break here, I have a tendency to buy the break anyway on a short candle formation. I mean, I'm talking 5 minutes, 10 minutes. But what also has a tendency to happen is it'll break, move down, and then you can get an even better entry as it comes to retest this neckline. Okay, if you've got the patience. So Euro Aussie, great one to look at. Cable, bearish, but do I want to be selling into the end of a trend now? Because I think 153.77 is going to hold me up. Okay, probably if you do, a little bounce here, short time frames, 5 minute reversal candles, and then move, and then look to take it to the downside. You know what we're doing, Aussie dollar. Again, not filling me with too much confidence. Hourly chart's going to be inside. So again, we need to see a decent break up to the upside. And after such a bearish day, we might target this level. At least we've had a go, and it's not going to cost us a lot of money. It's not going to cost us the bank if it doesn't look at. I've got quite a few screens, and I start work at 4:30 in the morning. So I get my views in pretty early. I have alarms set to trigger when it gets to areas of support and resistance. I look at 16 currency pairs in total. I look at the DAX, FTSE, the Dow. I don't look at indices, and I look at Bund bubble shuts. See if there's any other questions. What was the indicator for the miss? What was the indicator? What's the indicator for a massive downtrend? Well, the reason why it sold off today was because the unemployment figure out of Australia overnight. They added something like 29,000 to the unemployment figure or something. They didn't expect any. Yeah, I'm long euro sterling. Reason being, again, this is in tiny. I've got a weekly fib here, so I don't mind putting tiny on for a pretty decent reward, 400 odd points. Just to show you, just in case that's not refreshed. Yeah, I've got the end of a fifth wave. So I've got 1, 2, 3, 4, 1, 2, 3, 4, 5. Hopefully ending around here, but weekly's not being too kind. Daily, I've got a pin bar at my area of support. Monthly euro sterling trade, very long term, longest time frame trade I've ever taken. I bet. I hope it's in small. Because what you can do, you can build on your position. We're not reversing yet here. This is quite. Let's go with that trend. It's quite choppy around here, and that doesn't fill me with too much confidence because it looks like a 3-wave correction as opposed to a 5-wave extension. But I've got my stop under here. It's not going to kill me if she trades lower. And then if she does, I'm looking for an extension. I'll look around here to get long again. And again, it's all about money management. It's about I'm not really into scalping. I prefer to try and do swing trades to get into longer term positions. You can then, if you do find that your mentality and your bank looks a little bit better if you can build on winning positions as opposed to just sort of chipping away trying to pick tops and bottoms. And also, if you're in profit, it's quite easy to add in. I'm not a great believer in people doing these grid trades or adding into losing positions to improve their average. If you do that and the trend is strong, you're just building a worse position as opposed to building a better position. See what I'm saying? I mean, eventually it will turn, but you might have some massive pockets. It's like doing red-black on roulette. Double up, double up, double up, double up. Even if you start with £1, it's not very long before you're up to 160 odd quid. And the good thing the thing about casinos is that they have table limits. You do get to a certain extent and you can't bet anyway. Okay, guys. Any questions from what we talked about today? So just trying to show you my take on the market, how I tried to get into trades, both short term and long term, how time frames are important and about price action. And to admit when you're wrong is probably one of the most important things as well. Okay, guys. Best of luck, and be here again next week. It'll actually be Tuesday. Okay. Thanks very much. Thanks, Maud. Thanks, Adina. Thanks, guys, and good luck with your trading. Okay. Bye for now.